Hello friends. And now let's have a look at the types of default. The first one, it could be related to the genuine default is there. When the genuine default is there, like there are uncontrollable circumstances like job loss, or let's say salary disruption, or let's say medical emergencies there, or business downturn, or let's say the environment changes are there, or the complete economic meltdown is there, due to which the loan cannot be repaid by the customer. It's due to the uncontrollable circumstances. So for the reasons which are beyond the customer's control, borrower's control, right? Those could be the reason for the genuine default. And what will happen in case of the genuine default? What will be the bank's approach? The bank will be acting sympathetic. The bank is to act sympathetic. The bank can be doing the rescheduling of the loan. Rescheduling. Now, what do you mean by rescheduling? It may be the case that a restructuring can be done, like restructuring or rescheduling can be done. Like, let's say if the original tenure was 3 years, the bank could be entering into a new agreement with the borrower and can be extending the loan tenure. Or it could be the case that a secondary amount can be sanctioned so as to revive the unit, right? So these things can be done. Like restructuring can be done, rescheduling can be done. Further after that, it's about the willful default. The second one, it's about the willful default. Now, willful default is like intentional non-payment, that you are having the capacity to repay. You are having the capacity to repay, but you are not having the intention to pay. And it could be related that you have misused the funds, that you have misused the loan funds. Like you are having the adequate cash flow, but you are still not doing the repayment. Or let's say the loan assets which were created using the bank loan, right? Those were basically diluted, those were sold without the bank consent. Or it could also be related to diversion of siphoning of funds. So two or three cases are there. One, it's related to capacity to pay but still not paying. So A point, we can say that you are having capacity to pay, but still you are not paying. The second one, it's related to the sale of the particular asset without the consent of the bank. And the third one, it could be related to diversion of the funds. It's related to the diversion of the funds or siphoning of the funds. Clear with it? So what is the simple definition related to willful defaulter? That you are having the ability to pay. You are having the ability to pay, right? But the intentional default is there. Intentional default is there. That is it. That is about it. And what penal measures will be taken against such defaulters? First of all, no additional facilities are to be allowed. The banks should not be allowing any of the additional facilities. And the legal proceedings must be initiated immediately. You should not be waiting. The legal process must be initiated immediately. That is to be initiated. And the criminal action can also be like started if fraud is there. Like if fraud is involved, definitely you can be going for the criminal action also. And the action against the guarantor and borrower must be taken. Like it's not like the borrower is to be the party only, the guarantor is also to be made party, right? So if there is as per the contract act, you can be going against the guarantor also, you can be invoking the guarantee also, right? That's about it. Now I used two terms in the C part when I told you there is diversion of funds, or it could be related to the siphoning of the funds. Now let's understand these two terms. Let's understand these two terms. The first one, it's about the diversion of funds. Diversion of funds means what? That you're going to use a loan funds for any other purpose than the sanctioned use. Like you were sanctioned the use for the sanctioned the loan for the working capital purposes. You were sanctioned the funds for the working capital purposes, but you use for the long-term purposes. You purchased a capital asset out of it, right? So that is diversion of fund. Or let's say when you have transferred the funds to the group companies in the same entity, multiple group entities were there, you have transferred the funds to them. Or let's say the routing is done through some unauthorized bank, or let's say you have invested the money into unrelated activity, but still the funds are there, but you have diverted the money. But still the funds are there, but you have diverted the money. So utilization of the short-term working capital funds for the long-term purposes, deploying the borrow funds for the other purposes or activities, transferring the particular funds to the group companies or subsidiaries, or routing the funds to the banks which are not authorized, right? So these are related to the diversion of funds when you have diverted the funds. The second thing, it's related to the siphoning of the funds. Siphoning of the funds, like you have used the funds in such a manner that those are now not traceable. That's much more complex. Siphoning of funds is much more complex as compared to that of the diversion of funds. As compared to that of the diversion of funds, it's much more complex. So you have used the funds in such a manner now that the funds are now not traceable, and further, that basically has harmed the financial health of the borrower or the lender. So siphoning means that you have misused the funds. So there is misuse of the funds, and the funds are not traceable. The funds are now not traceable, and the intent is fraud. So we can say the fraudulent intent is there. That's about the siphoning of the funds, right? After that, the topic is related to monitoring of the loan accounts. Monitoring of the loan accounts. Why we want to do monitor? Because the main objective is that we want to early detect the signals that if there is slippage to the NP or something. So for the early detection, we want to like do the monitoring of the loan, and that is to be done for the ongoing basis, right? That is to be done for the ongoing basis. So for the genuine defaulters, you can be doing the restructuring of the loan, rescheduling of the loan, you can be providing the support, you can be going for the moratorium. But for the willful defaulter, the strict recovery is to be started, the legal enforcement is to be started immediately, right? And the multiple monitoring tools are there. Like you can be going for the financial data, you can be looking into the books of the customer, financials of the customers, those can be looked into. Or it could be related to, you can be checking if they are paying the EMIs or not. You can be going for the early warning signals, different ratios we do calculate, or different statements which were to be submitted by the borrower. If those are not submitted in time, it means there is something fishy with it, right? And definitely we can be going for the periodic review, like physical visit to the customer, right? Periodic visits to the customer place can be done. So these are the different tools which can be used for the monitoring purposes. Different tools which can be used for the monitoring purposes. Clear with it so far? Now the next topic is very, very important. It's about the special mention accounts. It's about the SMA in NPA. Now, when the account is green, when the customer is repaying the loan, we say it to be a standard account. We say such account to be a standard account, but when there is delinquency, when there is some irregularity, the account turns out to be a special mention account. The account turns out to be a special mention account. So SMA is what? It is a early warning classification. It's nothing else, but it's a early warning classification, right? So SMA is the early warning classification that's used by the bank so as to identify the incipient stress in the loan accounts. So if there is any stress in the loan accounts, we are to identify that particular thing, right? And the account is still in the standard asset category, but there is some stress into it. But there is some stress into it. Okay. And for that particular purpose, the timely corrective action is to be taken, right? So there are three categories related to the SMA, that is SMA 0, SMA 1, and SMA 2. So when the overdue is between 1 to 30 days, it's the SMA 0. When the overdue is 31 to 60 days, it is SMA 1. And when the overdue is 61 to 90 days, it is SMA 2. It is SMA 2, right? It means severe stress, that the slippage to NPA is possible. It is very much close to NPA because if the overdue is greater than 90 days, then the account will be becoming the non-performing asset. So SMA 2, we can say it's a last stage before the NPA classification. Before the NPA classification, it's a last stage, and it's applicable to the term loans, to the CCOD accounts, to the bill purchased, NPA status we are talking about, right? And for CC or OD accounts, CC or OD accounts, right? The status which is applicable, it's basically like out of order status. We don't go for the SMS status. We say out of order status for the CCOD accounts, right? And there are some rules and regulatory frameworks related to it. Like it is governed under the IRAC norms. There are the norms like income recognition and asset classification norms. And these norms are by the Reserve Bank of India, right? And further, it is very much required that you have to report the SMA2 status accounts to the CRILIC. SMA2 status accounts are to be reported to the CRILIC. That is a central repository of information on large credits. Central repository on information on the large credits to them to be reported, right? But the exposure threshold is, the threshold for this is like if the status is SMA2 and the exposure is, let's say, 5 crore or beyond 5 crore, then it is to be reported to the CRILIC, right? That's about the SMA status. Now let's have a look at this particular table, very much important table. So the account which is in order when there is no default, even up to SMA2, the account is a standard asset. Account is a standard asset up to that particular point. But after that, when the loan is not even repaid after 90 days, then it will turn out to be a NPA. From here, the NPA category does start. The non-performing asset category does start. Now your loan is not a standard asset anymore. And for standard asset, lower provisioning is to be maintained. Lower provisioning is to be maintained for the standard asset, whereas for the NPAs, higher provisioning is to be maintained, right? And if the loan is NPA for 12 months, then it will be a substandard asset. But if it is more than 12 months, it is NPA, then it will be transferred to the doubtful asset. Under the doubtful assets, we are having the category like DF1, DF2, DF3, right? And further, if you find like total loss is there and it is not recoverable and you have made all the efforts, but still the auditor wants the particular asset not to be written off, but to be in your books, then it will be transferred to the loss asset category. That's also under the NPA category, the loss asset category. Let's have a look at the provisioning requirements. Now, I told you one thing, that also for the standard assets, the provisioning is to be maintained. But the provision which is to be maintained for the standard asset is much lower. Like for the standard assets related to direct agriculture and micro small enterprises, it is 0.25% of the provision which is to be maintained. For the all other loans which are not classified as direct or SME or any other specific category, the 0.40% of the outstanding of the provisioning is to be maintained. For CRE, commercial real estate, 1% of the provisioning is to be maintained. And further for CRERH, commercial real estate, residential housing, 0.75% of the provisioning is to be maintained. And for teaser rate housing loans, where the rate of interest is lower in the initial period and then it will be increasing, in that scenario, during the teaser rate period, the provision of 2% is to be maintained. Even in the case of the standard loans I'm talking about, right? And for the substandard loans, the higher provision is applicable because from here we are starting the NPA category. The NPA category is starting from here. The doubtful assets are also under the NPA category, right? So higher percentage is to be charged. Like if the value of security is greater than 10%, value of security is greater than 10%, then we say such particular asset to be a secured asset. Let's say when the loan was sanctioned, the amount of loan was sanctioned to be 20 lakh, and the security which was available ab initio from the very beginning when the loan was sanctioned, it was rupees 3 lakh, right? That's greater than 10%. Then we say such exposure to be a secured exposure. And if the loan is a secured one, then the provision of 15% is to be charged in case of the substandard asset. And if it is unsecured one, let's say when the value of security ab initio is like lesser than or up to 10% of the total loan amount sanctioned, then it will be 25%. Provisioning is higher in case of the unsecured substandard assets, that is 25%. But if it is related to the infrastructure, the loan is basically sanctioned for the infrastructure purpose, then the provision applicable is 20%. Right? Getting it? And for the after 1 year, like for the first 90 days, SMA status was applicable. After that, the loan is transferred to the substandard category and it will be there for the 12 months period. And after the 12-month period, the account will be transferred to the doubtful asset category. It will be transferred to the doubtful asset category. And in doubtful asset category, we are having the three subcategories: doubtful 1, doubtful 2, doubtful 3. So in D1 category, it will be remaining there for the 12 months. In D2, it will be there for 24 months, and greater than 36 months in doubtful, it will be remaining in D3, and it can remain indefinitely in D3 category. There is no limit related to it, right? So in case of the D1, D2, D3, we have to bifurcate the balances, like for the realizable value of security, the value of the loans for which the value of security is available, right? And for the shortfall in security. Let's say the total loan amount is 20 lakh rupees and the security available is 3 lakh rupees. So we will be bifurcating like that the 17 lakh component is there where no security is available, that is shortfall in security, and 3 lakh will come under the RVS. So we'll be calculating the provisions for the value of security and for the shortfall in security for both, right? Unlike in the case of the substandard asset, the whole loan was either be secured or unsecured, and the provision was to be calculated on the complete outstanding amount. Once you just classified the loan account that it is secured or unsecured, then we calculated using the single percentage. But in case of the doubtful asset, we are to use the different percentages. For the RVS, we are to use a different percentage. For shortfall in security, it is different percentage, right? So for D1, it is 25% for the secured one. For D2, it is for D2 purpose, it is 40%. And for D3, whether it is secured or unsecured, it is 100%. And in D1 and D2 and D3, for shortfall in security, the 100% provision is to be maintained, right? So it's like in D1 for secured, for RVS, it is 25%. In D2 for RVS, it is 40%. For D3 for RVS, it is 100%. And for unsecured, in all three categories, it is 100%. Clear with it? And as I just told you that if the entire asset is like written off, is to be written off, but like it is permitted by the auditor that it should be remaining in your books only for any particular reason, then 100% of the provision is to be maintained in case of the loss asset. In case of the loss asset. Clear with it so far? And that will be all about this video. Thank you so much and see you again in the next video. If you want to get the complete course of JAIIB, the course is available in English only language also, and also the bilingual course is available. Simply just do WhatsApp JAIIB to the number 83609 44207, and I'll be sharing all the details with you. So thank you so much and see you again.